Hey guys, and welcome to today's technical overview. My name is Alejandro Zambrano, Chief Market Analyst with Amana Capital and TradeCaptain.com. Let's begin. We're going to take a look at the euro versus the USD. The market is clearly bearish, as you can see on this chart. My idea has been actually to sell around 117.63, and I'm just anticipating the market to eventually move down to 116.61, which is today's S2 level of the pivot point indicator. And my reason for being bearish is quite clear, as you can see on this chart. The short-term trend is bearish. You have a high here, and yet another lower high here. Now, because we haven't actually breached the low here created earlier this week, price could potentially move all the way up to 117.63, maybe all the way up to 118. But as long as you trade below 118.30, which is this level up here, I do anticipate the euro dollar to continue to move down lower and potentially reach the low here from July 27th around 116.50, 116.60. Next market we're going to cover is the pound versus the USD. Now let me show you a 4-hour chart of this market. So this is a 4-hour chart, and you can see how price hit a high here on the 3rd of August of pretty much 132.50, and then plummet all the way back down to support and the prior low from July 20th. Because we haven't had any strong type of pullback yet, and because we are also just a support, it could be that the pound dollar can continue to move up a little bit, but as long as you trade below 130.60, which is this level here, then I do anticipate another test of this level and maybe even a break to the 129.30 level. On this actually happening, the market could decline to 128, which is the level here from July 7th, July 12th. Dollar yen, here it is. The dollar yen on this 4-hour chart traded below last week's low in yesterday's session, and following that it had a bit of a corrective move to the upside. If you look at this from a bigger picture perspective, it's quite clear to see really that the market is bearish. Why? Well, because on this 4-hour chart, price is creating lower and lower highs. So I think traders are trying to enter on pullbacks. I mean, at least that would be a fair assumption. A simple way of identifying these levels is usually just to take a Fibonacci. So if we take a fib here from this level all the way to the current low, you can see that we actually almost corrected up to 50% of this decline here and rolled over. The exact level I'm focusing on is this level here, which is 110.10. So on tests of this level, I do think the market and traders will try to sell, and I do think most stop loss orders and so on are on the other side here at 110.95. The target I'm aiming for is the low here, which is really the next major support level. This level here, just as you can see on the daily chart, which is what we're looking at right now, is the June 7th low of 109.11. Let's talk a little bit about the New Zealand dollar today. It's obviously on the headlines following the central bank rate meeting overnight. The verdict from the market is that the statement was dovish, and the market uses as an opportunity to sell the New Zealand versus the US dollar. My setup heading into the event was actually to sell here at 73.54, which is up here, and for price to go down to 72.95. The market easily reached these levels, and if you're still short, then the idea would be actually just to book profits where we are right now. I do think that in the next few days the market will continue to go down lower, and as long as you trade below this high here, which is 73.73, then I do think the market will continue to go down. Why do I say so? Well, because the market is clearly in a downtrend. We have been creating lower and lower highs, and this is the last major high. Now, the preference really when trading these type of markets is to sell on a pullback, and a simple way is just to use the fib as we did on the pound dollar, or sorry, on the dollar yen, and just to put that at the actual high if the system allows. There we go. These are the 3 fibs You can also see here this is a simple breakout level, so usually the market will try to reverse at these levels. So from this level, which is pretty much the 1007303 level, I'm bearish. This is almost a 50% pullback, which you can see here according to the Fibonacci. So if this is the level where the market is going to reverse, which levels can we target? Well, to find that out, usually I just look at a bigger time frame to see where the next low is. And if you look here to your left, you can see here that we have the July 11th low at 72, which is also a big psychological level. And it's natural really for the market to potentially reach that level. We can also see here that before actually moving down to these levels, we had this level here, which is a low or level at 72.44 that the market touched on the 6th of July. And these are some short-term levels to work with. Now going back to the short term, the general idea here, where I think traders will try to do, is that we'll have that pullback, and then from this level here, the market may go down to 72.43 and maybe even lower. The benefit of this type of style is that we're gonna be bearish below 73.72, which is up here. And the beauty of this is that if we sell here, the risk is gonna be about 68 pip, but if we reach a target, it's gonna be 59, so almost a 1-to-1. But if we indeed continue to move down to 72, we can make about 100 pip just by risking about 69. And that's really what we're looking for in this short-term trading. A positive risk-reward ratio. It doesn't have to be 2 times because it's actually really hard to get that. But 1 up to 1.5 is usually what I'm looking for when I'm trading. And with that, guys, we conclude today's presentation. I also want to welcome everybody here to tradecaptain.com. This is the new website by Amana Capital. In this website, as you probably already seen, you're going to have videos, webinars. We're also going to give you updates on our seminars we're hosting across the world. And of course, the most important thing is daily technical analysis and all these macroeconomic news that we presented to you guys to hopefully make your trading even better. As well, don't forget to check out the premium section. We just initiated that part. We're going to add more and more info, but already right now you have the Advanced Forex ebook in that section. You'll also find quarterly updates soon and be able to partake in different client-exclusive seminars, client-exclusive webinars, and in our quarterly outlooks, which will be added shortly to the premium section as well. Thanks so much for joining me, and I'll see you guys later in the week. Thanks.